What's come across loud and clear to us is that consumers demand optionality and flexibility in the point of sale.
Welcome back, everybody. Today, we are really happy and excited to have the great Terry O'Neill with me, Managing Director, Head of Embedded Payments and Strategic FinTech Partnerships at Citi.
Hey, Jeffrey, good to see you. Thanks for having me.
Of course. Now, let's just go ahead and dive right into it, if you don't mind. So, you've been at Citi for more than 24 years, most recently working in embedded lending. Can you talk to us about your professional journey and your current role?
Absolutely. Yeah, 24 years at Citi. Right now, I'm responsible for embedded payments, point of sale lending, and I also am responsible for strategic fintech partnerships for the US Personal Bank. I've been in that role for about 3 years right now. And gosh, Jeffrey, over 24 years, there are a lot of roles that I have had. They've always been in payments, and I've always been focused on our payments businesses. So prior to the role that I'm currently in, I was the Chief Marketing Officer for Citi Retail Services. And prior to that, I was responsible for our branded cards organization for a number of years.
So, how has Citi's approach to consumer financing evolved over the years for both retailers and for customers or consumers? And how does Citi Retail Services stand out in such a competitive market?
We've been in point of sale lending for roughly 4 decades. And over those 4 decades, we've invested a lot in making sure that we can deliver products seamlessly into our merchants' points of sale, because we know how important point of sale lending products are, not just to consumers, but also to our merchants. We've always said in Citi Retail Services that we operate at the behest of our merchant partners and that we're here to serve our shared customers with distinction. So that means we continue to invest in technologies that enable us to embed products seamlessly into the sales journeys, whether those are online sales journeys or physical point of sale. We also invest in capabilities that help us move the customer through the application process as quickly as possible. Right? You have to remember that we sit at the intersection of merchants and consumers. We stand at the register, if you will, when a customer is trying to buy something from a merchant. And that requires us to move them through the application process in seconds and deliver a credit decision also within seconds, so that we can give them the payment credentials they need to purchase what they want when they want it. So most of our investments are focused on those two tenets. When we think about the other parts of it, we also spend a lot of time talking to merchants and talking to consumers about what's important to them. And what's come across loud and clear to us is that consumers demand optionality and flexibility in the point of sale. Said differently, when they're trying to buy something, whether it be an unexpected purchase or a splurge purchase, they want tools and calculators that help them understand how much that purchase will cost them on a monthly basis. How does that purchase best fit into their monthly budget so that they can make the right and best decision for them? What they've said to us is if that they don't see those tools and those calculators in the purchase journey, they'll look elsewhere. So from a merchant perspective, it's incumbent upon them to give their customers payment optionality and flexibility and show them how they can spread purchases out over time. From an issuer perspective, which is the role that we play, right, it's incumbent upon us to build those tools. So with the two products that we just launched, the Citi Pay digital line of credit and the Citi Pay merchant installment loan, we've invested in a couple of core capabilities. First and foremost, making sure that merchants can consume the products via APIs, standardized development kits, and widgets. That means it's easier for merchants to bring these products to their consumers and embed them in their shopping journey. And then we've also invested in conversational user interfaces for the consumer so that we could move them through that application in seconds, get them a decision, and deliver the payment credentials to the merchant. If we do all that right, it means that more merchants will have access to these products, more consumers will be able to take advantage of the payment optionality and flexibility that we offer, and in turn will help our merchant partners drive sales completion, average order value, and ultimately loyalty.
So, Terry, what are the biggest challenges that merchants face today when it comes to their current point of sale financing offers that they provide? And maybe I'll just add on to that. You spoke about speed, you spoke about options, you spoke about omni commerce. So maybe think about that as well as part of that question.
Yeah, I think merchants have a lot to consider now when they think about point of sale payment options or embedded payments, however we want to term it. I think that they need to think about a couple of core things. First of all, can they ingest the products seamlessly and easily, as I was saying earlier? Do their issuing partners have tools and calculators so that as a consumer, when I'm on the product pages, when I'm in my shopping cart, or when I'm in the checkout, I can see how much I'm buying or what I'm going to spend, how much that'll cost me on a monthly basis. Because the consumer's oftentimes making a decision. They're trying to understand how a large or unexpected purchase fits into their monthly budget. So as a merchant, being able to bring those calculators onto the product pages and make sure that it's real time is going to be critical in helping your consumers make an educated decision. I think the other things that merchants need to be considered, need to be really focused on and thoughtful about is who their partners are in the space. They should be looking for issuing partners who understand point of sale lending, who know how to underwrite in the point of sale and have the right fraud tools, because it's more than just about moving a customer through the application process quickly. It's about making sure that your issuing partners understand how to underwrite in the point of sale, because it's very different when you're doing a real-time underwriting decision. I think from there, the other pieces that they should be focused on are around security. What we've heard from consumers time and time again is they want to make sure that the transaction is secure. Do they trust the issuer? Do they know the brand? And is that transaction secure? Is their data secure? From there, I think that what merchants should be focused on is ensuring that customers have the same experience in the digital channel as they have in the physical channel, or vice versa, right? You mentioned omni-commerce, right? What consumers have come to expect is that they'll have these payment options and this payment flexibility regardless of the channel they choose to transact with the merchant. So ensuring that you have a partner who can deploy those capabilities agnostic of the channel that the consumer's purchasing in, because what we'll see is consumers will expect those same payment options, whether they're standing in your store or they're in your .com. And then I think the final piece that I would encourage merchants to think about is how alternative payment methods fit into your loyalty strategy. Oftentimes, we've been in private label for, as I said, 4 decades. Private label and co-brand have traditionally been a core tenet in merchants' loyalty ecosystems and in their loyalty strategies. I think they need to start thinking about alternative payment methods in the same way. How can an alternative payment method help you drive your loyalty strategy with your consumers? More than just executing that one transaction, how do they drive and how do they help you drive a continuous flywheel of loyalty for your consumers? And ensuring that when a customer uses an alternative payment mechanism, they don't leave your loyalty ecosystem. You don't have a partner who's trying to monetize that customer in another way by leveraging their data or by selling them potentially competing products, but actually helping you as the merchant to drive those repeat purchases. Those are all things that I would consider if I were in the merchant's shoes.
Citi has partnered with ChargeAfter to bring the CitiPay family of products to merchants and their customers. Terry, can you speak about how technology partnerships are improving the point-of-sale lending experience for merchants and ultimately their customers?
Our relationship with ChargeAfter is an important one for us. And we looked at a number of different partners when we thought about building out our technology capabilities. And frankly, we had a buy versus build conversation. As we look at it, we view partners like ChargeAfter as enablers for us. We're the issuer, we're the lender. That's our core capability. So as I was saying, we have tools that enable us to underwrite seamlessly, building conversational user interface applications. When we also think about how merchants consume the products and how we bring those products into the merchant's point of sale, it was critically important to us that merchants can do that easily and with as light a tech lift as possible. I spoke about private label and co-brand. Those integrations can often take months. Those are highly bespoke integrations, and they require a high tech lift from both the merchant and the issuer. When we think about CitiPay, the digital line of credit and the merchant installment loan, we want to make sure that more merchants can consume those products and bring those products into their sales journeys as easily and seamlessly as possible. And that's where we looked at technology enablers to help us do that, to help us deliver those products via APIs, to help us deliver those products via plugins, to ensure that we had coverage across multiple payment commerce platforms. And the reason that we did that is so that we can streamline the integration of these products, right? To give you an example, as I was saying, private label and co-brand can oftentimes take months, in some cases up to a year, and require significant tech investment from the merchant. With CitiPay, because we've enabled these products via APIs and plugins and widgets, they can bring these products into their merchants, into their points of sale, and into their sales journey in weeks. And our most notable partner has come to market in days. By partnering with companies like ChargeAfter, right? We have relationships with Shopify. We have relationships with a lot of other technology providers. It's enabled us to really shrink that integration window and bring the products to more merchants in a faster, more standardized way, and do it with a much lighter tech lift than we would otherwise be required to, or our merchant partners would be required to.
And maybe to wrap up, Terry, what embedded lending consumer financing trends do you think are on the horizon over the next, let's say, 24 months?
I don't usually consider myself a futurist or somebody who's able to read the future, but I think what we'll see is that point of sale lending is here to stay. We'll see more demand from consumers for these products. I've heard that loud and clear from them. They're looking for optionality and flexibility in the point of sale. So I think the question becomes, how do these products continue to evolve over the next 24 months? I think omni-commerce will be an important theme, right? We're very focused on ensuring that the experience is the same regardless of the channel. We're very focused on putting the tools in the consumer's hand so that the consumer can have that same experience, whether they're standing in your store or they're on your e-commerce site, or you have a sales agent in their home, right? Making sure that there's consistency of offer and consistency of experience. I also think we'll continue to hear more from consumers about security, as that will remain top of mind. And we're starting to see a theme evolve where consumers are very focused on what happens if they have an issue with the purchase. What happens if there's a dispute? What happens if there's a chargeback, right? And they'll look to somebody like Citi to stand behind them and back that purchase the same way that we do in a private label, co-brand, or general purpose card environment. And then with all of the other tools that we have available to us, remember, because we have a direct connection with our merchant partners, we have an opportunity in partnership with them to deliver a much more personalized payment experience than you otherwise would be able to in an open loop or network environment. I think that's the tip of the iceberg. When we think about customization, it'll go well beyond that in the next, call it 24 to 36 months.
Wonderful. And that's part of the power of working with a leading bank. Terry O'Neill, Managing Director, Head of Embedded Payments and Strategic FinTech Partnerships at Citi. Thank you so much for being with me today.